I'm Tiffany-Ann, and I am from Bottcher Business Management Agency, and we are a full-service business management firm, and we're also a QuickBooks Gold Pro advisor. We do a number of different services from social media management, digital marketing, and kind of the piece that makes us different is the finance piece and tying that all in together, working with systems and process development that rather than having kind of these isolated pieces, having your whole business work together. And so that, your marketing is tied in with your bookkeeping and your lead generation. And basically you're creating one big cohesive unit. And so that is how we can save time, maximize revenue, and help business owners and entrepreneurs work a few less hours and exceed their goals. So we talked about how to build your business budget in an afternoon. And so that is what we are going to be doing today. Did you guys get your workbooks as well as the template? So there's two different pieces. And so if you do not have the template, it was sent out in the last couple of hours, but it is in your email. And so you don't need to print out the templates. Those are all in Excel, and I'm going to walk you through that process today. Okay, so when we're talking about budgeting, we are talking about taking your business finances and organizing them in preparation for next year. So now is the time to start building out for 2022 in anticipation for all of the fantastic things to come for your business next year. So when we talk about, starting this budget and we look at why we're going to be doing some of those things, first we need to establish what a budget is and what a budget is not. And so, about 10 years ago, Gail Vaz-Oxlade started this, I'm not sure if you've seen it, but a show about budgeting. And since then, a lot of times people think of budgeting down with, her system of envelopes and money. And so for personal budgeting, whatever works for you is fantastic. But today we're talking about business budgeting. And so we are actually looking into the future rather than in the past. And so we are not talking about envelopes for tracking expenses. We're not talking about historic review. We're not talking about any kind of restriction. We're talking about a dynamic document that tracks four main areas of your business. So today we're going to be looking at capital expenditures, so planning, forward thinking. We're talking about variable costs, fixed costs, and then revenue forecasting. So the budget is a key piece of information used when making decisions. As a business owner, you are driving your business, and that budget is serving as a map or a tool to help you guide in the correct direction. Another name for a budget on a larger corporate scale is actually a pro forma income statement. And that is because you are really forecasting what your income statement should look like next year. And so, we as a small business owner, it doesn't need to be as complex as something that you might see for a publicly traded company, but we still need to be planning out. And that is allowing us to create plans in terms of resources, in terms of financing, and all those, being able to create predictable revenue. Okay, so reasons why we budget that have nothing to do with numbers. So we were just kind of chatting about predictable growth and building resources you need as you need them. The labor shortage is a serious problem at the moment. And so hiring good people, not just people, but good people that fit the culture of your business and have the skills that you need becomes a bigger and bigger problem. And so, being able to forecast that at your current growth rate, you're going to need to hire someone in third quarter. Well, if you think it's going to take 6 months to get that person ready to where they need to be, realistically, you need to be able to, start that hiring process earlier on. By creating this kind of predictable growth model with a plan and a budget, it means that, you're no longer being caught off guard by, not having resources ready as you need them. Or in the case of right now, when there is truly a labor shortage, you can start to plan and see that ahead of time and maybe make plans to make an investment into additional infrastructure so you don't need to add that extra person, maybe be a little more efficient. Those are the bigger questions that come with kind of the budgeting process that don't necessarily, or come to mind when you start to think, oh, I need to think budget, I need to think numbers, but it's also about kind of reducing the peaks and valleys of your business. It's about, plotting the key financial points, knowing where you should be. Everybody wants to, online, you see a lot of people say, oh, I want to have a 10K month. Oh, I want to have a 6-figure year. Oh, I want to have a 7-figure year. Those all start early on in the year. And those, and to be able to say, I'm on track or I'm on target is a good feeling, instead of, waiting until the end of the year and saying, well, I really fell short. So, this is how we start to really run and manage the business versus just kind of participate in the business. So how complex do things need to be? A budget can be as simple or as complex as you make it, and it really is guided by your business. And so as we go through today, there's a number of pieces that are super customized for your business. You may say, this section doesn't apply to me. You may say, I actually need more of this, because it really is driven by how your business operates and what is relevant to you. A question that I often ask is, what is the objective of this information? Just because you can track something doesn't mean that it's cost effective or efficient to do so. And so if you are, tracking something and it takes an extra 3 hours a month, say, and you never use that information, that 3 hours a month could be doing something that is driving revenue. It could be doing something that is helping grow or scale your business. And so we want to make sure that if we're adding additional detail, that there's a reason for it. As systems have progressed, more and more detail is available. We just need to be mindful that we don't want to overcomplicate things just because we can. Okay, so up on the screen, we're looking at a sample slide. And so what this is a sample profit and loss statement or an income statement, depending on where you're from, is kind of the variation in terms. So if you're a QuickBooks user, it's often called a profit and loss. If you're a Sage user, it's usually income statement. So we've got kind of a few main sections here. So the first section here at the top will always be your revenue or your sales. And you can see that you've got, in this example, design revenue, maintenance revenue. So if you have multiple income streams in your business, you have the ability to break these down. So, maybe if you were, doing construction, that could be something along the lines of, new install versus repairs. I would say no more than 5 would be a good guideline. If your business really only has one income stream, back to the let's not overcomplicate things, just have one. So again, what is the objective to adding the complexities? So if your business is growing and scaling and you anticipate that you may have different teams, so say back to that construction example, if you have one team that does new buildings and you have one team that does repairs, that is an area that you might want to split because you're going to be able to see the differences between those two groups. But having one is totally fine. Your next section is your cost of sales or your cost of goods sold. And so these are costs that are directly linked to the revenue generation. So we're going through these sections now, explaining what they are and how they work, because as we move through the process, we're going to have to be able to know how these function in order to start the budgeting process. So materials, labor, things that are directly linked to the cost of your product. You're actually going to have 2 different sections for labor. If you have a team, some of your labor will be directly linked to the product, and some of it might be overhead. So if you think of the example of having someone in the office who answers the phone, does emails, those types of things, that's an overhead position, and that comes a little later. That comes down in our operating expenses. These are things like office salaries, insurance, office rent, repairs, advertising. Those are those overhead costs. And down here at the bottom, we have some other expenses. And these are things at a small business level, we don't need to budget for. So keeping in mind that your assets will depreciate, and that is an expense that will be factored in at tax time by your accountant. And then, of course, everyone pays income taxes of some variety. Depending on where you are, the rate will change. We don't need to be budgeting for that at this level. It's something that as your business grows and becomes, a little more complicated, really, now you can start to add in these extra complexities. But your income tax is really not going to change other than completing some tax planning measures with your accountant. But that's something that you're really going to want to discuss with them and not something that you need to be budgeting for at this point in the time. So looking back kind of halfway up the page, the income statement or profit and loss statement is split into two sections. You've got above the gross profit line and below. And so gross profit is the income you're making based solely on your product or service sales. This is before you factor in any of your additional overhead expenses. Then you've got your net income a little further down. Now, if you've ever heard of an EBITDA, earnings before income tax and amortization. So this is what we are going to be budgeting for today as our net income, because as I said, we're not actually going to be factoring in depreciation or income tax expenses. You may have also heard the term gross margin or profit margin. These are percentages of these gross profit and net income. So to find them, be your gross profit divided by your revenue. That's going to be your gross margin. In order to get a percentage, you would times it by 100. And then for your net income is going to be net income divided by revenue is your profit margin. And so using that calculation is a great, very preliminary way to start studying your financial reports. If there is one tool to use if you're doing a monthly review, quarterly review, even a year to year, is to start and look for trends and fluctuations in the gross margin and profit margin. All right, so we've got cost of sales, also known as cost of goods sold, or even affectionately referred to as COGS. So these are the direct costs that go into your product and service. One of the pieces that I really want to discuss about COGS is the purchase of inventory. So the expense portion that is COGS is the cost of what you are selling. So if you go and decide, hey, I'm getting a great deal, we're going to use our painter example here from the slide. So paint is on sale and, our painter here is going to go and he's going to stock up. He's going to stock up on that white paint and whatnot. Sometimes people will try to use that as a bit of a tax savers. Oh, I'm going to drive up my expenses. Very common. You'll see it right at the end of the year. Oh, I went and bought a whole bunch of stuff. That is not actually an expense. You are purchasing inventory. It is sitting in your warehouse, it is sitting on your shelf, wherever it is. You have not sold that to the customer. So that is not included in cost of goods sold. The paint that you have sold to the customer is the expense of your business and it is included. So if you have any questions about that, please let me know. We will have some Q&A at the end. And, the inventory versus expense when it comes to cost of goods sold is a piece that once you truly understand, it really starts to click. But it's one of these pieces where it can really create an unexpected at year end. So, if you have said, oh, these are expenses, and then you complete your year end and it's determined, no, those are not expenses, you could end up owing significantly more tax. You could end up having a much bigger profit because those weren't actually expenses, they were inventory. So for our painter here, things that might be included in cost of sales, the paint, the actual labor hours of whoever is doing the painting. And then you've got things like consumables, rollers, paint trays, tape, all these types of products that realistically might not be tracked on a, I use 2/3 of a roll of tape. Those are just consumables, but those are still included in cost of sales. All right, now we're going to dive into fixed or variable expenses. I'm just going to grab a sip of water. So thinking back to our example statement, we've got, the revenue, the cost of goods sold, and then you've got your operating expenses. Now, different line items within each of these sections can be fixed or variable. So simply put, a variable expense increases when your sales increase. So in the example of our painter, the more things you paint, the more paint you go through, your paint is going to be a variable expense. Now, the, say, office rent for the painting company, it is perceived that the office rent would stay the same. You could paint 10 jobs, you could paint 25 jobs. The office is still the same. If you are going to grow enough that you need to move out of that office and move into a bigger office, that is a strategic business decision. And we will chat about that a little bit later, but that is still a fixed expense. Those are business decisions that you're making that are changing your expenses, but it's not directly linked to the sale of the product. So we're going to go through a couple of these just as an example of how these can be fixed or variable within your business. And it really is dependent on your business. So looking at insurance, auto insurance or liability insurance would be two different types of insurance. So on the liability side, typically that's going to be a fixed cost. You're going to apply for insurance. The insurance is going to say, hey, for $700 a year, you're going to get X coverage. This is a fixed cost. Next year, they're going to say, oh, what are your new sales? What is your risk management? And you might get a new different expense. But for the purpose of this year's budget, you can say, this is a fixed cost. Motor vehicle insurance can be a fixed cost or it can be a variable cost. And it truly depends on your business. If you have vehicles within your business that are part of revenue generation, some kind of moving store, service vehicles, these types of things, and you could end up adding additional vehicles. Maybe the painting company needs, is growing towards the end of the year and gets another painter who needs another vehicle, another set of insurance. This could be variable. And so that is why, as we go through these items, we need to really look and say, how does this relate to my business? It's one thing to learn about budgeting overall, but it's another thing to say, hey, how am I going to make this work for my business? And how am I taking exactly what I'm working on today and making it suit my needs? So office supplies, typically fixed. Office electricity, again, is a fixed expense. Business licenses, advertising, also a fixed cost. That's not to say it's going to stay the same. You may decide, hey, in the spring, I really want to run a big promotion. That's okay. It's not tied to the sales. Okay, materials, if these are to be used on a job, these are variable. So if you're doing a job, more jobs, more materials. Okay, jumping into that, planning ahead, capital planning. Now, some of these aren't expenses when it comes to taxable income. Assets and expenses are treated differently in financial year-end statements and tax preparation. But for the purpose of budgeting, we are looking to say, how much outlay am I going to need for bigger things that are not necessarily directly operating expenses? Something like a website. Maybe you need a website. Maybe you need a new website. Maybe you need to implement a CRM, customer relationship management tool, coaching, training, deciding this year I really want to work through some of these things I don't know. I want to learn about it. System setups. Any of these big pieces that you're going to need this year. When we're looking at budgeting, you want to throw anything out the window that you know about, depreciating assets and tax benefits and all of these pieces. You're simply looking ahead and saying, what is my business going to need outside of the everyday? You're not going to need a website all the time, but you might need a website this year. And then you might need a little website touch up at the end of next year if this is something that you can't do yourself. Again, very specific to your business. Some people might say, hey, I do my website in-house. That's never going to be a cost. I just have the monthly cost of the domain hosting and whatnot. So that's a fixed expense, but we don't need to do any big capital planning for it. Whereas if you're going to need to spend $5,000 on a fancy e-commerce website, this is something you're going to want to be planning for. All right, into revenue, the money coming in. So first question when we start to look at budgeting. So we've gone through all of the different sections. We're understanding how they work together. But the next piece is really deciding and putting some of these pieces related specifically to your business. So if your business is brand new and you don't have a current revenue, your current revenue is zero. That's okay. That if your current revenue is, based off of the last 3 months because your business is 3 months old, that's fine. You're just going to go with the information that you have. So you want to establish, what has your revenue growth rate been in 2021? So we're going to go over the equation first, and then I'm going to give you kind of a little bit more information. So revenue in 2021 minus revenue in 2020. So new minus old. Then you're going to take that number and divide it by the revenue in 2020 times by 100%. And this is going to give you your revenue growth rate. If your year, it's interesting because we've seen some massive changes in especially, entrepreneurship and a lot of people moving to online sales. And for some businesses, 2020 and 2021 have been really terrible years. And as we start to make a comeback, that hopefully will start to change. For other businesses, we've seen massive growth. And businesses that were not in the online space taking advantage of that. A lot of people, they call it the 2021, the Great Resignation. A lot of people leaving their jobs and following their passions and saying, hey, life is too short. So if your year is very varied, so if, say, at the beginning of the year, you had a couple of months that were super quiet, and then in the last 6 months, you have really picked up. You're wanting to determine your revenue growth rate based on how your business is currently going. So if you only have 6 months worth of data, then we really just want to use the revenue, based on that block of time, if that makes sense. We're not wanting to find an average just because we can. We're trying to use that growth rate to future plan. Remember, budgeting is about future, not about what happened in the past. We already know what happened in the past. We don't need to do any additional review at the budgeting process other than using that data to help us plan the way forward. Financial statements tell us what happened, and numbers don't lie. They're very black and white. So, it's now taking that information and using the parts of it that are relevant to move forward. So then we start to look and we say, okay, current growth rate is 30%, say, for example. And we want to establish what you believe your January 2022 revenue will be based off your current operations. So if your business has not launched yet, and your business is going to not launch until fall of next year, for example, well, your revenue in January is going to be nothing. And that's okay, but you may still have some expenses as you start to build your business. Or you may say, well, January is a pretty quiet month, but I believe my sales are going to be $40,000, $50,000. Whatever that number is for you, we're going to break that down into those 31 days. And we're rather than looking at all the year and trying to plan for seasonal changes and growth and this and that, right now, the very first thing that we want to do with revenue after establishing the growth rate, we want to say, what do we believe that my business is capable of in January 2022? The next step is determine with purely organic growth, not changing any massive strategy within your business. What is your business capable of? So what we're really saying here is, given everything I have available to me right now, what is my business capable of? So if we go back to our painting example, if you have one painter, one car, one office, what is that person capable of earning? Is that a $15,000 a month? Is it $20,000 a month? At one point, your resources are maxed out. And in order to take that next step, you have to add another person. You have to do something different. And so you have to decide what, if you think of your business as a funnel, how much can flow through the funnel before you start to run into a problem? And this, in any funnel, is where we're going to get that bottleneck. So what is going to cause the bottleneck? Is it going to be, your lack of ability to hire a person? Maybe, if you're in the creative space, maybe you can't hire someone else to do that work for you. Maybe you are that person and your resource is, restricted by your time. There's still only 24 hours in a day. Maybe it's equipment time. If you were, say, baking loaves of bread, you only have so many hours of oven time. And at one point, that oven is going to be the bottleneck of your process. And you either need another oven or you're going to need to change your business strategy. Could be space. Maybe you don't have you don't have a big enough warehouse. Could be time. Any of these pieces, determining what is your business with its current resources capable of at max. All right, so we are going to be going through the template, and I'm going to be showing you exactly how to enter the information using what we've been talking about in these sections. And at the very beginning, I promised you did not need to be an Excel wizard nor mathematician in order to do the budget, and that all stays true, because within this template, the only cells you will update are going to be the gray with the red outline. So I'm going to switch over to that template. And if you would like to bring the template up on your screen and follow along, that's fantastic. And then we'll go through this process. There will be lots of times for Q&A at the end if you have questions about how some of these, specific line items are working with your business and your business model. So if you just one moment and we will swap over. All right, can I just get a thumbs up if you guys can see the Excel template? Awesome. Okay, so all right, so when we're looking at the template, because all of your formulas are entered in already, this is a great tool to be able to play around with things a little bit and really start to use this as a planning tool for your business. You can run in some hypothetical situations. You can add in your, everything you know currently, and as your year evolves, there's no reason why you can't say, hey, I need to make a change, and I actually want to add in this other potential revenue source, but I want to see what kind of effect that would have on my business. I think it's a great idea, but maybe not. So I just want to add some numbers in. I want to double check. You want to save a copy of this document and add in your, the numbers that go along with your idea. You can really start to then see what is the effect. And because sometimes adding something in is not nearly as simple as just, oh, well, I'm going to sell an extra $5,000 a month. Okay, but what are the variable costs that come with that? What kind of additional investment is going to be required in terms of equipment or training, those types of things? So we're going to start, and we're going to go through. I've used an annual growth rate of 30%. Now, in the small business space, in the first 5 years, if you are continuing to grow and you are really on an upswing, 30% is going to be relatively average. Some people talk about, quadrupling the size of their business in 6 months. It's possible. Some people talk about, going out of business in 3 years. Again, that's why I encourage you to calculate it, because 30% really is just a guide, and very industry and business specific. So, but I've used the 30% so that we can see how the template works. You can change the percentage based on your calculation, and also start to kind of look at, what do you want your growth to be? If your business, especially if your business is very new, thinking, okay, well, what do I have planned for next year? That's what it really comes down to, budgeting being more than just numbers, because it really comes down to, what is my plan? What is your plan for your business for next summer? What is your, stretch goal? What is your conservative numbers? What is, the worst it could be in your mind? And starting to really think about those situations and using those to then create the numbers and model those situations. So within our template here, we have an input column, the gray and the red. So we talked about that is where we're going to put our numbers. And then you've got a column for each month. And then the very end column R, is going to be your annual numbers. And so when we look at the budget, we have, the monthly budget that you will review. That is going to be the numbers you're going to review every month, or as your months become available through your bookkeeping. So some people like to review on a quarter, some people review monthly. That really depends on your business. So we've set it up as monthly and annual. From there, if you wanted to create your quarterly numbers, you would just add the 3-month columns together. So under the revenue column, we have type of revenue, type of revenue, type of revenue. So within these types of revenues, these are where you can enter your different revenue streams or not. If you remember back at the beginning, we said, if there is a benefit to your business to adding this complexity, great. If there isn't, no problem. So if we say our type of revenue number one, and we go back to our, what do we think we're capable of in January? So we're going to say we believe that we are capable of $5,000 a month in January. Now, if you know these numbers, feel free to enter your numbers as you're going along. The nice thing about this is you can change and adapt them. So for the example that I'm going to go through, we'll say that there is 2 revenue streams for this business. One is going to be $5,000 a month in January, and then there's a new revenue stream, and right now it's only $1,000 a month. And so what this tool is doing is it is using your growth rate, your average growth rate. So I'm going to put it back to 30 so that we are looking at something a little more conservative. And we're going to say, this is what we could expect over the year if we had consistent growth. There will obviously be fluctuations based on your business. Some businesses are heavier in the summer, some, Christmas rush, but this is going to forecast based on continuous growth. I would recommend sticking with a continual growth model for about 3 years until you have more data to support what your seasonal fluctuations are, unless your business is very season focused. If you run something where you are super busy for 3 months out of the year and don't do anything for the rest of the year, we were at the pumpkin patch yesterday and they were crazy, so busy. But this is the kind of business where it would not make sense to do a continual growth model because they are busy in the fall. So this sheet is based on that continual growth model. Then we move down into that next section, which is our cost of goods sold or cost of sales. Now, as you can see in this percentage column, we have the F or the V, and that is for fixed or variable costs. And in our cost of sales, all 3 columns are variable. So you've got your labor, your materials, so what you're selling, and other. So anything else that you want to put into that category, you've got your third row there. And what this is, so if we're going to say for $5,000 a month, it's going to cost $3,000 a month in labor. Okay, so that's 50%. So now we have this percentage. So now you know that 50% of your sales go to the actual labor of putting those on. Now, there's certain industries that are going to be super heavy in labor. Any kind of service where the person producing the service is most of the service. Something like house cleaning, or even something like landscaping, if you weren't doing like landscaping maintenance, something where you're not adding a whole bunch of product or dirt or whatnot. But if something where the person doing the job is going to be super heavy in labor, your percentage is going to be higher. And that's okay. There is no right or wrong answer. It really only doesn't work if at the very end, you're not making any money. So everybody's way of building this and the percentages that are going to comprise of your business budget, super specific to you. It really just comes down to the only pieces that are the same for everyone is how much profit are you making, and does that support your business? Is there a reason to be doing this business? Okay, so if we said in our example business, we have some materials, and so we say maybe it costs $800 a month. Okay, so that's 13%. So as you can see through the template, it's doing all the calculations in terms of forecasting that out over the year. And we're saying, okay, so we're expecting that materials are going to be 13% of the sales, but because the sales are increasing over the year, because they're growing, our materials are going to increase. We don't want budgeting to be used as a restrictive tool, especially when it comes to growth. You would not want to say, I am budgeting $1,000 a month for materials all year. Well, that might work if you're selling $3,000 a month, but if by the end of the month you're selling $7,000, I mean, how are you going to do that with only $1,000 in materials? Those certain parts of your business are going to grow as you grow. Certain parts of your business is fantastic if you can grow and they don't grow, because that is money that you directly put into your pocket. So if you can say, hey, I don't need to get a bigger office. I don't actually need more insurance. I don't need to do, more advertising. Maybe the reputation of your business and word of mouth is now filling in that, advertising gap. So you don't have to spend more than $2,000 on advertising. Maybe, the difference in the advertising is free. All of those pieces, that's how you start to really drive up that net income. So we look at our gross profit. So we go through, and now I've added in the percentage here. We were talking about using that percentage to really review and look for trends. So you could calculate that at the end of each month and say, hey, my gross profit is at 37%, 37%. Oh my goodness, my gross profit is at 32%. What happened? That would be a reason to go and investigate. Oh, my supplier has really increased those materials. My goodness, maybe I need to shop that around. Maybe I need to change my pricing model to reflect that price increase. You can see, that increase or decrease is really changing how it works for your business. And then you can start to use the data to make educated decisions for your business to ensure that you end where you want to be, that you are managing your business instead of just participating in your business. Okay, so then we move down into our operating expenses. And we've got some columns or some rows, that are fixed and some that are variable. So if we said accounting and legal, so you've got your bookkeeping, you've got your year-end filing, you've got, I would say for most small businesses, you could maybe save $1,500, depending on what you're doing. Noticing that this number is the same all the way across because it's fixed. So at the beginning in January, when your gross profit is $2,200, $1,500, that's a lot. By the end of the year, you've got a gross profit of $2,800. The numbers $1,500 if your gross profit was $2,200. It's an example. That would not be great. I'll change it to make our numbers look a little better. There we go. Okay, communication. So things like cell phones, internet, those types of things. Okay, we're just adding in some numbers here, insurance. So you're going to want to be pulling this information from data you have or research that you're doing. So if you are saying, hey, I don't have this, I'm not sure what it's going to be, then, you want to be doing some research, figuring out what that would be, because sometimes you can say, hey, my numbers look really great. I have a little more room for something like advertising, or, oh my goodness, it looks a little tight, especially at the beginning of the year. I better wait and hold off on something until later in the year. Okay. For this example, we've got motor vehicles as variable. So that would be if you were using a vehicle really directly related to your revenue generation, if you had multiple service vehicles, those types of things. Office supplies. These are example categories. You can change them. So I've added in 4 extra rows, and 2 of them are fixed and 2 of them are variable. So if you had specific expenses for your business that maybe don't fall into these generic categories that you want to add on, then you've got the room there. You've got 2 fixed and you've got 2 variable. So you can add in what you need. If you don't want to add anything, again, No problem. Skip over them. They'll just calculate at 0. Okay, we've got 2 additional lines here for wages. So overhead wages are going to be wages that are not directly linked to sales, but that are also not yours. So if you have a virtual assistant, if you have a receptionist, if you have an accounting staff member, if you have a general laborer, if you have any of these types of things where it's just applies to the company as an overhead, you can add this information in here. Management or owner's wages are going to fall here. A question that I often get is, well, should I be taking this as an owner's draw? Would that be different? Should I be taking this in dividends? Do I need a paycheck? The budget is not for tax planning purposes, and we kind of chatted about that when it comes to assets and expenses. So whether or not at the end of the year your accountant determines that this money would be best served to you and the business if we said this is an owner draw, those are very specific personal decisions based on your tax and business situation. It doesn't really matter at the budgeting phase, because at the end of the day, the money comes out. Whether you call it a draw, a dividend, a paycheck, it's money that your business is going to pay out. And so we're going to say, okay, it's going to be X. And I've really seen an increase, interestingly. There's a book called Profit First, and I don't recommend the Profit First model. However, people seem really excited about the concept of factoring in and planning to pay themselves. It's the method says, it's a set percentage every time you have money coming in, is a very simplistic way of explaining it. But you don't need that permission to pay yourself. You need to plan. You're running a business to pay yourself. Otherwise, it's a hobby. And so, a lot of times you say, hey, I'm not going to take anything out of the business for the first 6 months because, I really want to grow. And that's fine. I get it, absolutely. But you need to have a spot and a plan, because you can't work endlessly. This is 12 months. You can't say, oh, I'm not taking any money. I'll take money when it's available. That's very hard to plan for. And that's those peaks and valleys that we talked about. You're far better off to say, hey, I'm going to take a check on the 1st of the month or the 15th or whatever, however you want to do that. And it's going to be for X. We want to smooth, cost smoothing with the budget, not peaks and valleys. So, it is far better off for business and planning and cash flow to say, hey, I am going to take $2,500 a month. Well, we can see for this particular budget that doesn't work, because this line now, your net income is at a loss. So we're going to say, well, that's a little aggressive. Maybe I'm going to just take $1,000 a month. For our example, we hope the person has another job of some kind. So now you've worked out, you've got your basic budget. I said it could be done in an afternoon, and it absolutely can. And so we've got this section down below, and this is for your extraordinary expenses and capital planning. So these are the things like the website. These are the things like your new CRM system. Maybe, you're going to trade shows and you need the booth set up, or you need whatever that big ticket items are. That's what's going to go in down here. So if we've said we need a website and we have decided that the website is going to cost us $5,000, we've decided that, the first payment of that is going to be due in March. And then the web designer has said, it's going to take 60 days, and then I'm going to need that second payment. Things like websites and whatnot are not something that you're going to budget for all the time. We put them here because this is a plan. And so we can say, okay, well, in March, when that first payment is due, we can tell that the net income from the business is not going to be enough to pay for that $2,500. So this is where we decide, okay, well, we either need to wait, we need to finance, we need to generate some cash. Maybe we need to run a promotion or a sale of some kind. There's 1,000 different ways that you can do something about this, but it's very simple to say, oh, I'm going to need to do something. And then you need to decide what that is as the owner of your business. Now, if you said, oh, we also need a CRM system, and the CRM system is going to be $1,000, and we're going to do that starting in second quarter, and it's going to be $200. Okay, for simplicity, this is where you're putting your budgeted numbers under the total, and in the annual column, it's just adding it up for you to make sure that you have added the appropriate number of payments in. Those numbers should be the same. By adding these in, you can then start to develop and plan and say, oh, you know, May's going to be a bit of a heavy month in terms of extraordinary expenses and planning. The budget comes down to being the map for your business and how you are driving your business forward and using the data and information. And so this tool really helps you to plan and to use the information in a way that is really understandable and isn't a box of receipts with I think I'm making money, and it's not a set of financial statements that you may or may not completely understand what you're looking at. And so, you know, the end goal and objective is that your bookkeeping is up to date. And at the end of every month, you're able to say, hey, this was my budget. This is my actual. Let's compare. You know, oh, revenue is way up. Fantastic. Okay. Revenue is up. That means that it's okay that your variable expenses are up because they're supposed to go up. You know, it's okay that, you know, your specific pieces like your extraordinary expenses. Oh yeah, we planned for the website. Fantastic. You know, if you all of a sudden had a big thing that you didn't plan for, you know, maybe you need something, a new system, or, you know, maybe you thought you had a great website, but all of a sudden it's not doing what you need. You know, I use the website as an example because it really is something that in today's day and age, pretty much every business has a website. So I use that because, you know, that makes it relatable to everyone. But whatever your business needs, you can, you know, oh my goodness, we need to make this big expenditure. Okay, well, let me pull out the budget and let's plan this in. Okay, so if I, you know, divide this over a few payments, that works. Or, you know, this is the information to empower you to run your business and make decisions. So I am going to swap back over. And all right. Are we back on the slides? We're good? Yeah. We're going to quickly go through just our new program that is launching that looks at, you know, taking information and how we're going to run our business with it. And then at that point, we're going to break into Q&A. And if you want to stick around and ask more questions, that's fantastic. But if you want to go, then you have all of the information. And I also will be sending out the replay link as well to those who did not move over to Zoom and join us. So the replay link will go out and you will have access to that. So one of the pieces of running a business and entrepreneurship is truly the lack of team, especially as you're starting out. You are an entrepreneur, you're making these decisions, and sometimes you're thinking, I hope this is the right one, but maybe not. And so there's this element of second guessing, and even the most confident person really benefits from mentorship, community, and the ability to ask a question. It's watching the self-trust grow in someone when they ask you a question and you say, yeah, that's right. And they ask a question and you say, well, what do you think the answer is? And they go, I think it's this. And you're like, yeah, that's right. That process, whether, for anyone, is how you continue you trust yourself, you grow, and you continue to, manage that business instead of just participate in your business. So, over the last several months, I've really wanted to find a way to provide this community and support to businesses, and for those that aren't necessarily looking for the full service business management, which we do and we love to do, but there are businesses that aren't there yet. They just don't need it. Maybe they're starting out, maybe it's, a grassroots idea that is coming to fruition, or maybe it is a smaller business that is scaling, but, isn't going to be, hitting those revenue targets, and then they just don't need the full-time business management. So we are launching our 2022 mastermind called Navigator. So if you think of Navigator as the person who sits in the passenger seat that is helping with the map, saying, hey, this is where we're going. Yep, we're on track. That is what this program is going to be for entrepreneurs, business owners, and those who are trying to continue to be successful with their business, no matter the industry, no matter the size. So within Navigator, you're going to have a monthly 2-hour group training session. So it's going to be much like this. It's just going to be more interactive. So we're going to cover off some specific targets and tasks for your business. Things like setting up Google My Business correctly, which is a really underutilized tool in terms of the internet. People talk about Facebook and Instagram, and you hear more and more about Pinterest and LinkedIn and all of these things, but Google really owns the internet. I don't know if you've heard. And so, not utilizing Google's tools when you want Google to be, offering your website up to your clients and these types of things, missed opportunity. And hey, it's free. So all of these pieces where, you don't want to be missing opportunities that you just didn't even know they were there. Things like, what is the difference between Pinterest and Facebook? And what kind of staying power is that offering? Where is your content going to be creating value in the short term and the long term? So we're going to cover things, digital marketing. We're going to look at your customer journey process. We're going to look at things like, your customer avatar and deciding, are you on track, and developing these strategies. So all of these types of things are going to go on in these monthly 2-hour group training sessions. We're also going to have a monthly 90-minute one-on-one strategy session to go over whatever is going on in your business. That is your time. And so from these strategy sessions, we can create action items, and really these sessions should help guide your process through 2022 and ensure that you really are where you want to be, and that you have a person in your corner answering your questions and saying, hey, yeah, that's a great idea. And the last piece is access to the exclusive community. So we're going to have community, ongoing support, lots of questions. This is that community and camaraderie part of entrepreneurship and business ownership that is missing. And there are some incredible groups of people, and I want to bring that to the small business space. And so this is where Navigator kind of originated from. So the total annual value of Navigator is $4,166. We're going to briefly chat about the action taker bonuses. So you will get a copy of the 2022 business planner So this is going to look at objectives and key results. And so this isn't your average personal planner. This is very specific for your business journey. You're also going to get 10 virtual assistant hours for your business for whatever you want to use them for. Someone from our team will provide you support. Maybe that's some social media marketing creation. Maybe that's getting through some tasks that you've had on your list for far too long. You're also going to get one bonus strategy session. So the action taker bonuses are available until Saturday at midnight. After that, they go away. So, and the cost of Navigator is $267 a month. This is a fantastic deal. It is an amazing way to have someone to ask those questions to, the support and the network, and this, building out the strategy through those 90-minute monthly sessions, as well as your understanding and knowledge through the group training sessions.